You might have noticed from the soaring prices of real estate, groceries, and even vehicles, inflation has been a very big issue in the past few years. Currently, the inflation rate is around 3 to 4%, but in 2022, it went as high as 9.1%. Millions of Americans are feeling the effects of inflation, and for many of these people, it's getting harder and harder to afford everyday necessities. And as a response to inflation, the IRS released a new inflation income tax brackets on Thursday, November 9th, 2023. And today what I'm going to do is break down the tax bracket as well as the changes of the standard deduction and everything that you would want to know as it pertains to your taxes for 2024. Now, before I get into the video, what I'm going to need you to do is to like this video and subscribe to the channel so you won't miss out on all these great tax tips and updates that is going to help you know what is going on with your taxes. And without further ado, let's dive into the video. All right, so here are the tax bracket for single filers in the United States. If you're making income between $0 and all the way up to $11,600, you're going to be in the 10% federal tax rate. So that's the first tax bracket, and there are 7 federal tax brackets, which is going to bring us to tax bracket number 2. If you're earning income between $11,601 all the way up to, $47,150, you're going to be taxed at the 12% tax bracket. So the 12% tax bracket, that's actually one of the smallest tax brackets compared to the 10% tax bracket. So let's jump to the third one. So if you're earning income from $47,151 all the way up to $100,525, you're going to be in the 22% tax bracket. This is actually where the majority of taxpayers fall into. The average income in the United States is roughly around $70,000. But that leaves us 4 other tax brackets. So let's go into the fourth one. That's going to tax your income between $100,526 all the way up to $191,950, which will be at a 24% tax rate. The 24% tax rate only covers income from $100,526 up to $191,950. After you make over $191,950, all of your income now is going to jump into the next bracket. So income between $191,951 all the way up to $243,725 is now going to be in the 32% tax rate. So now if you're getting more successful, the income that you're going to be earning is going to be getting taxed at a higher tax rate. But not all of your income is subject to the 32%. Only income between those two numbers, $191,951 up to $243,725. So let's go to the next tax bracket. It's going to be number 6. If you have income between $243,726 all the way up to $609,300, you're going to be taxed at the 35% tax rate. This is where we start getting into the top 1% of income earners. They're earning income between, like, let's say $250,000 all the way up to $609,000. That's going to be taxed at the 35%, which is going to bring us to the last tax bracket, which is the number 7, and that's going to be any income over $609,301, which brings it to 37%. So 37% is the maximum tax rate that you can be taxed at, and you're not in the 37% tax bracket unless you're making over $609,301. But you'll come to know that the married filing joint tax brackets are different, or very different actually, from the single filers. We just discussed the single filer, so let's move into the married filing joint. For those who are filing married filing joint, the income brackets are damn near double. So if you're earning income from $0 all the way up to $23,200, you're going to be taxed at the 10% tax rate. Now, this is just the first tax bracket for married filing joint. The second one is going to be $23,201, and that's going to go all the way up to $94,300, which is going to put you at the 12% tax rate. If you're a married couple earning $94,301 all the way up to $201,050, you are going to be taxed at the 22% tax rate, which is the third tax bracket. So if the fourth one is going to be $201,051 all the way up to $383,900. That's going to put you at the 24% tax rate. The fifth one, $383,901 all the way up to $487,450. You're going to be taxed at the 32% tax rate. So you're going to start to see the 32% tax bracket ends at $487,000, but for single filers, the 32% tax bracket ends at the $243,000. So you have the ability to jump in between the 35% tax bracket a lot faster than depending on how you file your tax return. Let's go into tax bracket number 6 for married filers, I should say. So if you're making between $487,451 all the way up to $731,200, you are going to be taxed at the 35% tax rate. So just getting into the 35% tax bracket is a lot harder for married filing joint couple as opposed to someone who's filing as a single filer. That also means that getting to the 37% tax bracket means that you'll have to earn, I should say, over $731,201 to be in the 37% tax bracket. So if you're married filing joint and you haven't reached $731,201 yet in income, you're not going to be in the highest of tax brackets. And this is why it's always beneficial to run the numbers to determine if it makes more sense to file as married filing joint versus filing as single. The majority of couples who are married typically filed married filing joint unless the other spouse has some previous tax debt, or they're trying to qualify for, let's say, like a student interest loan deduction, but that's honestly not even worth it because that's only worth $2,500. So typically, if you're married, you're gonna file married filing joint. But now let's jump into the head of household filers. And it's important for you guys to know that not every taxpayer qualifies for head of household. If you're married legally, you cannot file head of household. You really only have two filing statuses, married filing joint or married filing separate. But however, if you are supporting dependents and you're single, this is where you will be able to claim the head of household filing status. And you'll receive a greater tax deduction and more favorable tax brackets than if you were just filing single. Let's discuss the head of household tax brackets. Number one is going to be if you're earning income between $0 all the way up to $16,550, that's going to put you at the 10% tax rate. Now, if you're making more than that, you're going to be between the $16,551 all the way up to $63,100. That's going to put you at the 12% tax rate. Number three, $63,101, and that's going to go all the way up to $100,500, which will put you at the next tax rate, which is 22%. That's going to leave us with the last four. So if you're going to be making between $100,501 all the way up to $191,950, that will put you at the 24% tax rate, which is pretty good. Number five is going to be between $191,951 all the way up to $243,700, which will put you at the 32% tax bracket. And by now, you guys should know there's only two tax brackets left, which is 35% and 37%. So the 35%, that's going to be $243,701 all the way up to $609,350. And like I said, that'll put you at the 35%. And needless to say, anything over that would be the tax bracket number 7, which is $609,351, like I said, which will put you at the 37%. So here it is. These are the tax brackets for head of household. And if you are head of household, that means you have qualifying dependents, which will allow you to qualify for this status. Many people should be claiming head of household if they are taking care of dependents, because it allows for more favorable tax rates. So now what we're going to discuss is the other changes that happen in the tax code, including the standard deduction. And this is for the year of 2024. So this year, and I just want to remind you guys that the United States uses a graduating tax rate system, which means that the tax rate of a particular tax bracket, it does not apply for the entirety of your income. It only applies to income between those limits of the bracket. So as the tax rate gets higher, as your income rises from bracket to bracket. So for example, if you're a single filer, the first $11,600 of income that you have is going to be taxed at the 10%. The next $35,549 of your income will then be taxed at the 12%, and so on and so forth. And this is how the tax brackets work. So you're probably asking yourself, will the IRS continue to make inflation adjustments to the tax brackets? And as long as there's inflation, they will continue to make inflation adjustments. It's almost certain that the IRS will continue to make these tax bracket changes every year. So you will expect to see the inflation adjustments to the tax bracket next year, and the year after that, and the year after that, and the year after that, and so on and forth, as long as inflation keeps rising. Now, what about the standard deduction? Now that we've already discussed all these tax bracket changes for 2024, I just want to go over exactly what the standard deduction is in case you do not know what it is or how it works. The standard deduction is a large tax deduction that most people who are not going to itemize their deductions are eligible for. In other words, it's an alternative to itemizing your deductions. The way it works is that you are allowed to subtract the standard deduction amount from your taxable income, and this reduces your taxable income significantly. For example, if you're a single filer making $100,000 a year and you take the standard deduction, it will reduce your taxable income to $85,400. That's pretty significant. But what does that mean for you? Well, when the IRS makes inflation adjustments to the tax brackets, it tends to make them slightly easier for people from a tax perspective. And this is because it means you'll have to make more money in order to get pushed into a higher tax bracket. So in other words, when the IRS makes inflation adjustments to the tax brackets, it means that you will probably end up owing less in taxes than you might have otherwise if you make the same amount of money in 2024 than you did in previous years. And this is because the tax brackets get pushed up, not down. But understand this. Let's go over an example. So let's just say in 2023, you made $100,000. In this case, you would have fallen in the 24% tax bracket as the final tax bracket that your income will be subject to. But now that you're making the exact same money in 2024, which is $100,000, like I said, you're actually going to fall into the 22% tax bracket. And the reason why this is the case is because the IRS has inflated the tax bracket. As you can see, that this is a result of you owing us significantly less in taxes due to the IRS inflation adjustment. Now, why does the IRS make inflation adjustments? The IRS is well aware that the cost of living has been increasing significantly due to inflation. So people's everyday lives tend to get way more expensive. Everything's more expensive. So the IRS will adjust the tax bracket in order to fight against inflation to keep the playing field relatively leveled out. The IRS knows that inflation hurts people financially. Thus, it makes periodic adjustments to keep the tax brackets fair, considering how much inflation has been occurring. So you're probably asking yourself, does everyone move into a different tax bracket when the IRS makes these inflation adjustments? And the answer to that is going to be no. And this is very important, you guys, because there's been a lot of fake news out there saying that everyone is going to be getting more money in their paychecks starting this year.
Stop the cap. Stop the cap right now. Stop the cap.
Which in some cases it will be true, but for the most part it's not going to be true. Now don't get fooled by what you see on the internet. It's always good to go ask a tax professional. This is really important, you guys, because earlier in this video I explained how you will fall into a lower tax bracket for 2024 if you made $100,000 in 2023 and in 2024. However, if you made $110,000 in both of these years, then you wouldn't change or wouldn't move into a different tax bracket because you would have landed in the same tax bracket. So no, not everyone is going to automatically enter into a new tax bracket when the IRS makes inflation adjustments. Down. So we've pretty much covered everything about the new tax brackets, but here are some of the key things I want you to walk away with from watching this video. Number one is going to be the IRS makes regular inflation adjustments to the tax brackets, and it released its new inflation adjustments early November of 2023. Number two, the IRS inflation adjustments could push you into a different tax bracket and affect your marginal tax rate. And number three, the IRS will probably continue to make inflation adjustments to the tax brackets in the foreseeable future. And number four, don't believe everything you see on the internet because you will be misguided and end up getting wrong information thinking you're going to be getting more money in your paycheck. So if you have any questions regarding inflation or the tax bracket, make sure you comment below, or you can email the email I'm going to put right here. Now, if you are a business owner or a content creator looking for professional tax help, make sure you click the link in my bio to become a client. My name is Ricky, co-founder of Ricky and Nikki Accounting Services, and what we do here is we make taxes very easy to figure out. So give us a follow to stay up to date and to get your taxes right.